This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us today Mr. G. Vamshi-Krishna, Joint Managing Director, Mr. Shafi, CFO, and Mr. Vinay Bhatija, Head Investor Relations. I now hand the conference over to Mr. G. Vamshi-Krishna. Thank you, and over to you.
Yeah, a very good afternoon to everybody on the call. I welcome you all to this Concall for the quarter. And thank you all for joining and participating in our earnings call Q3 FY22. I hope this year's beginnings have treated everyone better than the previous two. The performance of our company, the building materials and the yarn division has been good. The overall quarter revenues have grown by 26% year on year and 21% quarter on quarter. The building segment revenue has grown by 17% for the 9 months as compared to the previous year 9 months, with a strong growth in volumes. The segment margins for the current 9 months is 14.8%. The increase in input costs and logistic costs has led to this decrease in margins during this period. The VNext business has done exceptionally well, and for the second consecutive quarter, it has recorded the highest ever quarterly revenues. The domestic segment for V-Boats has outperformed, and the exports has improved as well. The VNext businesses has grown with volumes and estimating highest ever revenues for the full year 2021-22. We are happy to inform you that the new boards plant at Coimbatore also is operational from 1st of Jan 2022. The capacity addition would be about 50,000 metric tons, and it would further add to the top line and the bottom line in the coming financial year. The synthetic yarn division has outperformed the expectations and reported the highest ever revenues at 85 crores for the quarter with very good margins. The main markets have recovered from COVID, and going forward we expect continuous growth with the share of sustainable yarn increasing at a good rate. The other division, the Atom Solar Integrated Roofing, has improved revenues compared to previous years and the previous quarter and has picked up momentum. Revenues on quarter-on-quarter basis has grown by 20% in this segment. We did do some exciting projects which are noteworthy to mention. We have done some projects for the Indian Railways, the Serum Institute which makes Covishield vaccines. We are in the pipeline to make projects for Manipal Institute and various other hospitals and data center providers. Atom is still yet to take its true potential in terms of the growth rate that we are observing. We are very confident that it will do well in the near future. We expect it to reach its full capacity of 100% for the capacity utilization by 23-24. Usually, the July-December time of the year is an off-season quarter for our traditional businesses, which is the roofing. And taking into consideration this roofing business, our roofing has done really well with good growth in quarter and volumes. However, there is a pressure of margins due to the increase in input costs and logistic costs overall. And we are confident that the company will take adequate measures we are confident that the company will take adequate measures for the profitable growth in coming quarters. The expansion at our Raebareli plant would also be complete by this financial year end, and we expect this will help us in increasing our market share in the northern India. New initiatives talking about strengthening our resolve towards a green and sustainable future. We have set up a sustainability department which would help us be on track towards our resolve. Our new initiatives conquer this resolve. The progress on Atom Charge, the EV charging stations, has been very good. We have done close to 100 charging stations, and we plan to close this year by adding another 150 charging stations, making it a total of 250 by the end of FY22. As also mentioned, we are looking to partner with other electric charging equipment providers who are in the market and are facing good growth traction in the market. We also have an app to support the Atom charging stations that is totally based on IoT. Coming to the financial performance, the total revenue for the quarter is 354 crores compared to 281 crores of the previous year. That is an increase of 26%. The EBITDA margins for the current quarter is 12.5%, whereas for the 9-month period, it is 15.5%. The PAT for the quarter is 24 crores compared to 23 crores of last year. PAT for 9 months is 88 crores compared to 80 crores, which is an increase of 11% compared to the previous period. The building product segment Q3 revenue was 269 crores compared to 236 crores in Q3 of last year, showing an increase of 14%. The segment margins for the quarter are around 10.7%, and for the 9 months, it is 14.84%. The yarn business, the Q3 revenue was 85 compared to 45 crores in Q3 of last year, showing an increase of more than 89% with a margin of 19%. The interest cost has come down from 2.73 crores in the previous year to 2.4 crores this quarter. Summarizing the current position of the company, with the world's leaders meeting to discuss climate change at summits like G20 and COP26, and also our PM committing a net zero country by 2070, our organization is at its inflection point. The Indian Railways, which has committed itself to be a net zero company by 2030, is a good potential market target for our product Atom Solar Roof, which would be a perfect fit to light up the Indian Railways along with the bus stands and other government setups across the country. To add on, the huge warehouse demand that is of significant increase, given the e-commerce giants and other corporates entering the market, and individual housing societies gaining awareness towards sustainable and green power, all are giving us a good growth pattern to look at in the near future. Atom Solar Roof would be the first choice given its advantages in its way of space utilization and higher electricity generation compared to the other alternatives in the market, and thus giving us a faster payback. With this, US, India, and other major economies committing to infrastructure spending, leading to improved economy and higher disposable income, this coupled with lower interest rates and the housing sector boom will have a multiplier effect on our VNext boat segment. Not to mention builders like Mahindra Life Spaces, Godrej, and others have committed to green products, has been long-standing support to our products. V-Boats has been their first choice as it is an IGBC certified product and emits 30 times lesser carbon emissions compared to other products in the building industry. Over our yarn segment, which we call Wonder Yarn, is also picking up in the recycled plastic segment, where we are recycling PET bottles, which has been a huge hit in the European and American markets. The uses in Europe entail from making tablecloths to suitings and even curtains, while this is also used to make banners across the world. Battery separators is also a big segment, which is of good potential for our yarns and has been doing exceedingly well. So the future is green and sustainable, and we feel that Visaka Industries is geared up for the future growth, given each of our business verticals has established itself and is on a path for a good growth rate in the near future. Our teams are intact, and we are working and striving very hard and passionately to achieve the set goals for the team and for our company. Thank you very much, and over to you for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Lovepreet, an individual investor. Please go ahead.
So yeah, sir, you said the margin has dropped from 14.9 from the last quarter to 12.5 this quarter. So can you explain the reasons? Hello, am I audible?
Oh, sorry, I was on mute. I was just answering your question. Sorry about that. So as I mentioned, we are actually having a huge price differential in our raw material input costs, which have gone up across various industries. And we have been no different at that, unfortunately. So that is one major reason. And the second reason is that the logistic costs gone up drastically across the world, as we have been observing. And these are the two major reasons for the reduction in the margins. Yeah.
Okay, thank you.
Thank you.
Thank you. The next question is from the line of Chirag Shah, an individual investor. Please go ahead.
Good evening, sir. Congratulations on a good set of numbers. So I have some questions on the board's business. This plant that you have set up in Coimbatore, so what would be the approximate cost of setting up this plant?
Yeah, that we have spent about 90 to 100 crores in this facility. We will be getting a revenue also around the same range, around 1:1 capital to turnover ratio for that.
1:1 would be the utilization as a turnover. Okay, sir. And what would be the time frame that you think that you can reach this utilization of 100 crores or revenue? 100 crores?
By next financial year end, we should be able to touch that.
Okay. Yeah. And so for FY21 at least, based on the annual report, the EBITDA margins of the both segments is approximately 12%. You think with an increase in value-added products, this can go higher, or you think this would be the 12% would be a sustainable number?
Yeah, absolutely. Actually, the whole focus now is to increase our value-added products. So we do great in designer boards, which also give us better pricing and margins in the market. So the continuous effort is to increase the value-added products through this product mix as well.
Okay. So what would be the proportion right now of value-added products in the board segment?
So maybe we'll be doing around 10 to 15% right now.
Okay, so then this 12% margin. This 12% margin has some level, it can go up much higher in time.
Yeah, absolutely. We are looking at least 15% upwards for this division in terms of the complete operations, yeah.
Okay. And sir, did you mention that you also export these boards?
Yeah, absolutely. So we do almost 30% of our current capacity to the Middle East, to European markets, to Nepal, Sri Lanka, and Thailand. So various countries as of now. Yeah.
Okay. And so, for example, if in the European market or in the Middle East, so is there no domestic players in that segment, or you all are more cost competitive?
So yeah, definitely we will be more cost competitive, but the majority of the business is of imports for these countries, even America for that matter. The United States, even though they have a large in-house manufacturing facility, who's James Hardy and others, right. These guys have huge imports in terms of fiber cement boards. So our effort is to increase as we go, provided that we get good return as well.
So would the domestic market returns be better, or they'll be probably better in the export market? Obviously, just now freight cost and all has increased, but all things being equal?
Yeah, right now, of course, as you rightly mentioned, the freight cost is a big hindrance for us. Nevertheless, we are maintaining our markets internationally, given the pricing. But definitely, the way we see it, India is the growing market, and we are experiencing better returns in overall returns in India. So our focus has been predominantly to increase that market share here.
Okay. So who would be the competitors in this segment, in the board segment?
Oh, in boards, there is Everest, there's Ramco, there is Swastik for immediate competitors. Then there's Bison Panel, this NCL group, they also have a version of it. But all of us are actually trying to substitute the plywood market. So in essence, the real substitution, the real competitors would be how to substitute the plywood industry to use eco-friendly boards such as our products. So that is our main focus.
So last question from my end. So any impact of the present Russian crisis on the boards? Because I believe some raw material is imported from there.
Not on the boards.
Not on the boards at all.
Not on the boards.
Only the roofing.
Roofing also, I think we are for now we are well taken care of. We are not seeing any major issue for at least the next 6 months. So we are fine in that space. Yeah.
So in the boards, any raw material which is imported, or everything is sourced domestically, sir?
Boards, we do import pulp. Pulp is one of the products that is imported, but other than that, everything is localized.
Okay, sir. I'll come back in the queue for further questions. Thank you so much.
Definitely. Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Yash Agarwal from JM Financial. Please go ahead.
Yeah, hi. Good evening, sir. A few questions. So, what has been the price increase in cement, asbestos, and the board segment? Because I believe you were mentioning about the freight and commodity costs going up. So, in the current quarter, have we taken any price increase to offset the cost increasing, which could make us go to the margin which we had last financial year?
Yes. So we have had the price increases almost about 10% in our raw material mix in the overall, given various materials that we looked at, and we've tried to offset that to the maximum extent, and the offset having about 2% reduction. That's what we have shown. So that is the rate at which we are operating. Yeah.
No, so I think so you've taken a price increase of 2% is what I heard, or more. Oh, sorry, I couldn't understand.
Price increase is actually based on market trends, as you are aware. We are trying our best to pass on the input costs as much as possible. So we have got an increase of hardly about 5 rupees in this quarter, but the effort is constant to increase it further. So yeah.
And given the fact that, the first half of the calendar year is the peak season for building product segment, how do you see the demand shaping up this time around? You had some bit of impact of Omicron in January, and you have, higher commodity cost going through February. So what do you feel about this current season for the demand on the boards and asbestos side? How robust is it? Or
Actually, I wouldn't agree that we are only first half of the year dependent. It's only first quarter that is a major contributor for us. But Q4 and Q3 again is where we see revival of the markets coming in. So we are positive on that trend. And secondly, Omicron has had a slowdown for about a week or two in terms of the markets, overall markets. But I think we are seeing things coming back to normalcy as way before. So we are positive about the coming quarters as well. Yeah.
Sure. And on the yarn business, how has been the yarn pricing trend again? Post the third quarter, have they held up well, or there has been some decline in the yarn prices for us?
So the yarn business is completely, it's fluctuating on and off, but it's a more of a management in terms of how best we can procure at the right time and ensure that we get the best in terms of pricing. So clearly, as we've shared the details and numbers, we are on the right track and we are doing well on that front.
Okay. Got it. Thank you.
Thank you.
Thank you. The next question is from the line of Shubham Agarwal from Equitas India. Please go ahead.
Yeah, thank you for the opportunity. And first of all, congratulations, Team Visaka, for the performance. So my first question is regarding the roofing and board division. So recently we are coming across few news feeds from rural India, which is talking about slowdown. Specifically, the two-wheeler numbers that are coming out is pretty low. So I wanted to get a sense from you, how do you see this current season panning and the monsoon trend and the rural health in specific? If you can give some insight, it will be really helpful.
Yeah, absolutely. I think first off, I will definitely agree with you. There has been some amount of slowdown in terms of what we were expecting, and predominantly it has been because of Omicron. But that lasted for hardly 2 to 3 weeks is what we have experienced. Seeing the market trend now, how we are seeing things go, I think the markets are slightly on the way of recovery. We are seeing a different trend from what we have observed during the core Omicron period. So I think things are going to be positive. We are not necessarily seeing a reverse trend or anything. Coming to the rural segment, yes, this time monsoons also were good. We have seen that there has been a good impact in terms of the rains. But we are waiting. I think there is a slight delay in terms of that to convert into the market spend, but the trend is looking positive.
Okay. And as far as the margin is concerned, so if we compare year on year, the total margin drop was close to 6% as far as building product is concerned. So I wanted to know your input regarding how much are we able to pass on as of now, given the market trend, and will we be able to reach back to the margin levels that we saw last year, or we will settle somewhere in between?
Sure. So once again, I think the main issue has been that our industry has done exceedingly well last year. That has been predominantly because of the roofing division, because of the sudden the supply, the cut in supply because of the lockdown and the pent-up demand that had flown through right after lockdown had opened. That was actually the major benefit that this industry had got. And we could get such margins because of the high demand. This year, what we are seeing is, again, things are back to normal. There's no pent-up demand because of lockdown, and things are going in a very smooth fashion. So that type of margin on a specific year-to-year comparison will be, a uphill task, given that the industry has stabilized. Having said that, the constant effort is to ensure that we get good margins and maintain our levels to the best optimum rates. And I think we are on track to do that. Though the hike in the margins what we got last year may not be seen this year, we are seeing that being covered up with our other businesses doing well. That's the reason you see that our margins, even though there is a slight drop on an overall basis, we are still in the positive trend. So that's the take on that.
Okay. And on this VNext division, we delivered 77 crore of revenue. But specifically, if I want to, know what's the EBIT margin that we delivered this quarter, will that be possible?
That we can share that with you offline.
Okay, no problem. No problem. And on the raw material side, so as you mentioned, there were both raw material pressure as well as freight pressure. I believe there are the last month of December quarter, the raw material prices started to go down. So did you observe the same trend in your input cost, and what is the freight scenario as of now compared to last quarter or last 2 quarters?
So first off, I think it's important to observe the trend. Typically, the pulp industry follows a trend because it's a seasonal product for them. So there is some amount of increase and decrease that happens over the year. But what we have observed is that there is no major, exciting reduction in the freight that we have observed, because the market still has to stabilize. And I think that will take almost, our estimate is in the next 6 months or so, we should see a lot of normalization happen, because if you see globally also, most countries are lifting the basic COVID measures, safety measures to be taken. Also, they're saying that we don't have to abide by that, as recent as UK lifting the COVID norms. So as situation normalizes, we feel that the logistics costing, which was super high in the last 1.5 year, will come back to some sense of normal tendency. That's when we'll be able to get the best benefit in terms of the price reductions. But having said that, we are very strong in R&D. Our complete focus is on how to ensure that we keep our raw material costs low, and that will always be on track.
Okay, perfect. And lastly, on the Wonder Yarn division, as you mentioned that you are getting good traction from the US and Europe, and our division performed phenomenally well this quarter. Do we see any future plan to expand this as of now?
So absolutely. So I think it's interesting to observe that the recycled yarns, what we have undertaken as a new product development, has worked well in our favor. We have managed to reach almost up to 25 to 30% of our current sale that we are doing. And that needs to be seen in terms of how well the market stabilizes. We don't want to, base our judgment on a couple of months or quarters. But we are positive on that. Definitely, as the market shows us a good stable outflow of this 20 to 30% and higher, definitely we'll be exploring in that phase as well.
So this quarter, if I'm not wrong, we must have benefited also because of liquidation of inventory, given that last 2 quarters we were building up inventory on this side. So is it fair to assume that by Q4 things will get back to at least slightly higher than normal?
So I would like to mention this point that, the last 2 to 3 years have been extremely turbulent for the textile industry, wherein many companies had taken shutdowns and had severe losses. And we as a company opted a different strategy, and we are seeing those benefits as we go. I think definitely we will be in a good position in the coming quarters. I can tell you that much. Yeah.
Okay, fair enough. So I'll get back in the queue. Thank you for answering.
Surely. Thank you.
Yeah.
Thank you. The next question is from the line of Mulesh Savla from Shah and Savla LLP. Please go ahead.
Thanks for taking my question. Sir, my question is on our autumn division. As I understand, we have one of the best mechanical properties for this division. Ours is cyclone resistance, leak proof, fire resistance, and all those qualities are there. Still, I see that we are not gaining good traction. May I know the total cumulative megawatt till now we have constructed, and what are we planning for 2-3 years down the line?
Surely, absolutely. I think first off, you're absolutely right. The qualities of the product are exceedingly good. We can stand wind loads of up to 250 kilometers per hour. We can take a point load of around 300 kilos. So these are some of the advantages as a roof and solar that we've developed. And rightly mentioned, we have also got patents in US, in South Africa, and India for that product. So the product the life of the product has been hardly about 2.5-3 years now. And the first year we did a revenue of about 7 to 8 crores. Following the COVID year, which was around the same figure, and this year we are projecting to double that. We have set up almost about 30 megawatts right now in our plant capacity. And what we are observing is that in the last couple of months, we have crossed about 60 to 70% in our capacity utilization. And we foresee that in a very, very near quarters, we'll be seeing 100% capacity utilization in that segment as well. Given that, we are also entering good reputed names in the industry, as people like the standard names that we have shared earlier in terms of Indian Railways or Serum Institute or Manipal. These projects have taken us almost 2 years to close. And now the response that we are getting with the products is immensely positive. I think the growth rates will be very insignificant to mention once we really get the product with them going. So we are very bullish on this product. We feel that we'll be able to show the results very soon in the next couple of months in terms of the expansion and the product deployment. Yeah.
Thank you. The next question is from the line of Satish Kumar, from an individual investor. Please go ahead.
Hello, sir. Congratulations for the good quarter. So are you manufacturing solar cells, sir, or are you importing? And because there is a new import duty from April this year, right? So how that new duty will impact or benefit our company on the solar business? And are we applying PLI for solar manufacturing?
Yeah, absolutely. So you're 100% right. Again, there is an import duty that is coming on the cells, and that will definitely help us as we are completely made in India product, and we are also ALMM certified. There are hardly just 20 to 25 companies in the country who have been ALMM certified, and the basis on the certification is that we are made in India and we are manufactured in India. And to answer to your first point, we right now we are importing only the solar cells. Everything else is made in India. So our product, our module, our atom roof is actually completely made in India. Only the solar cells are imported. That also we are seeing a lot of Indian companies like Tata and Adani who are proposing to make solar cells in the country. So we will be soon taking the benefit of that as well.
Thank you. May I request Mr. Satish Kumar to please rejoin the queue? We have participants waiting for their turn.
Sure.
Thank you. The next question is from the line of Vishal Talreja from DB. Please go ahead.
Yeah, congratulations, sir, on a good set of numbers, and thank you for the opportunity. My question is regarding the EV charging stations. I wanted to know what sort of a revenue model is it, and what is the capex required, and what kind of batteries and vehicles does it support?
Yeah, so actually what we are doing is that we are concentrating on the charging infrastructure. So nationally, if you see, people are talking about charging stations, charging points and all of these guys are still dependent on thermal power. If you really see the net impact in terms of what we are trying to do, we are actually creating a solar generating network station. So that is our concept, wherein the entire infrastructure will be catered and built by VNext products, and the roof for this infrastructure will be by Atom. So the charging station per se will be powered by Atom, and this is technology agnostic. What I mean by that is you can charge a car, you can charge a bike, you can charge an auto, any sort of an electric vehicle, or even your traditional electricity appliances and uses can be offset with our Atom charge. So that is the point one to answer your question. Second is that what we are trying to do is we are trying to take benefit of our large dealer network. So we have almost around 10,000 dealer stations across the country. What we are doing is we are trying to facilitate and give charging infrastructure to provide a rural network and an urban network which will have a solar generating asset across the country. So that is our focus. Regarding capex and returns, we'll be very happy to take it offline and share with you in detail what we are trying to do in that aspect. Thank you.
Noted. Thank you.
Thank you. The next question is from the line of Anish Uvalia from Banyan Capital Advisors. Please go ahead.
Sir, good evening and thank you for the opportunity. Sir, I had a question related to the roofing division. So, would we help to know if there is any pricing pressure that we are facing in this division? If you could throw some more color, that will be helpful. Thank you.
Yeah, thank you. So
is
the
there
pricing pressure,
intensity, which is causing that?
So there is no pricing pressure in terms of increasing the prices. What I mean by that is our price is always dependent on the market trends and the competitive products. What I mean to say is that the steel competitors, the steel sheets, always have had a healthy difference between our product pricing. So as long as there is a good difference between the metal sheets and the AC roofing sheets, we are good to have a pricing control in the market in terms of what best we can push on in terms of our increasing costs. And given the situation in the last Q2 and Q3, the market trend was a little slow because of off season and the overall demand.
Right.
So that's the reason you don't see that super high margin that we got earlier, but we are in the right track in terms of how we maintain the demand and supply costing. Yeah.
So you mentioned that you have taken some ₹5 increase you have got until now. So would you be able to give some more color around what was the price that we enjoy on which you have taken this ₹5 increase? I mean, how much is that as a percentage?
Sorry, you'd like to know the percentage of increase?
Yeah, sir. I mean, this ₹5 translates into how much percentage increase?
So it will be around 5 to 7% in overall terms. Yeah.
Okay, and sir, how is your outlook for FY23? I mean, do you expect the volumes to further grow on our FY22 base, given that we had a good monsoon? So how should we think about the next year, given that we're almost coming to the end of this year?
Yeah, absolutely. I think if you see the overall industry per se and the product fit, if you really talk about the target market and the product fit, I think asbestos roof, the roofing sheet market is perfect for the Indian residential market. What I mean by that is in India, almost 70% is in the rural side, where the rural housing heavily depends on a roofing sheet. And fortunately for us, the metal roof does not fit in the target market in that space, because nobody would like to have a metal roof as their house. Like I always ask this question, you would not like to live in a metal box. What I mean by that is that the radiation of heat is extremely high, and given that we are in a rural side of the country, the heat transfer and the rain effect on the roof is quite high. And in that utility of things, the AC roofing sheet is a perfect fit. And we see that this increase in this housing spends, increase in the focus for rural housing will definitely give us a positive trend in terms of how the market will grow. Apart from that, we are seeing good increase in the north and eastern markets. So that is the space where we've also taken an expansion. So we definitely see that the market is in a good place in the coming year and so on.
Sir, thanks for your free-flowing thoughts, sir. But last question, if I can squeeze in, sir, this Raebareli plant, once this becomes operational, can you name some of the organized players that you will be competing with and who are strong over there? So whom do we plan to take the market share from in this segment?
I don't, that like I always keep mentioning this. I think the game of stealing market share or taking market share is not what we follow. In fact, that is a very strong logic that we take across our product markets. If you really see, each of our products is innovative in its own way, and we try our best to be ahead of the market. And likewise, even in our marketing strategy, we always try to develop further markets and newer markets rather than just sharing the market network from one company to another. So I think the strategy itself is different for us. We will not be fitting in that bracket of things.
Yeah. So can it be, would it be, yeah, sure.
Please rejoin the
queue. Sure. Thank you so much.
Thank you. The next question is from the line of Divyanshi from Havells Investments. Please go ahead.
Thank you for the opportunity. My question is, what scope of work are we doing under VNext Solutions, and what are the revenue targets?
So is this about VNext Solutions?
Yes.
Yeah. So VNext Solutions, actually, I didn't get a chance to explain about it. It was our turnkey solutions wing. What we plan to do with that is we are taking project orders from corporates, mainly B2B, and executing them. And the yearly targets that we've taken, the coming financial year, we would see about 50 crores is what we are expecting from that division.
Thank you.
Thank you.
Thank you. The next question is from the line of Dhananjay Mishra from Sunidhi Securities and Finance Limited. Please go ahead.
Yeah, hello, sir. So you mentioned that in roofing division we are at 60-70% utilization, while in presentation it is about 18%. So where is the mismatch?
Sorry, can you please repeat?
Sir, in roofing division, solar roofing division, we are at 60-70% utilization instead. While as per the volume we have sold, which is mentioned in presentation, it is about 18% in Q3. So
I'm talking about last quarter. The presentation has to be giving you the overall picture, but we are seeing exceedingly positive numbers last quarter.
So you mean to say in Q4 we are reaching 60-70%?
Yeah, we should be looking upwards of that. Yeah.
Okay. And per megawatt, the selling price is about, I think in this 4 crore.
It will be anywhere between 4.5 to 5 crores, depending on site to site. But that will be the approximate cost.
Okay. So FY24 we are reaching 100%. So on 100% capacity utilization, we will do about maybe 130 crore without any further capex in this segment.
We for the 30 megawatts, we should be doing around 80 to 90 crores. And on in the same facility with the very marginal investment of a couple of crores now, less than 10 crores hardly, we should be bumping that up to 60 megawatts. So for 60 megawatts, we can touch almost about 150 crores in revenue. So that just to give you an idea in terms of what we can expect.
Okay. So anyway, we are targeting 150 crore in FY24 in terms of revenue. Absolutely.
I wouldn't say in FY24, but definitely the 30 megawatt we are seeing very close to 100% capacity utilization, upon which we will announce a small expansion in the same facility to meet the 150.
Okay. And last question with respect to this synthetic yarn division, we are already reaching 120% in this quarter. So any capex plan because of good demand from export market, and so we are planning any capex in this division, and what will be the margin trend going forward?
So the margins are good in this division. As traditionally also we have done well in this segment. Coming to the expansion plans, we are just studying and observing the increase in the sustainability yarn space. As that increases, definitely we will be looking at how best to take up an expansion. But as of now, we just want to observe for another quarter or so in terms of how well the market increase is happening and how we are able to service that.
So if at all any capex happens, what will be the quantum? I mean, we are at, I think, 2752 spinning position. So what will be the relevant number which you will be looking for?
It will be hard for me to give you a number at this stage, but at the right time we will definitely share our expansion plans on textiles as well, please.
Okay, sir. All the best.
Thank you.
Thank you. The next question is from the line of Nilesh Vazirani from Tata Investments. Please go ahead.
Yeah, thank you for the opportunity. I have a couple of questions. So my first question is the revenue mix, which is currently 66 to 34% asbestos. What is the target mix, and by what time we plan to achieve it? Additionally, there is one thing. The yarn segment looks the odd man out compared to all latest product additions by a company in building material segment. So do we have plans to spin it off?
So first off, in terms of the product mix, I think we should be touching 50% in the next 2 years. That's our target. In the next 2 to 3 years, we should be definitely seeing our revenue mix of at least 50% non-asbestos and 50% asbestos. The textile spin-off, honestly speaking, this has been on the discussion for an extremely long time. We get asked this question quite a lot, but there have been no plans as of now. So it is in the parent company as of now. Coming to the other divisions, actually we are doing pretty well in the V-neck space as well. We'll be reaching almost about 250 crores in revenue in the V-neck division with 12+% margins in that space as well.
And I have one more question. Like looking at the diverse businesses the company is with the extensive portfolio in EPC, V-neck, solar roofs, now charging stations. So don't we think that we have too much on our plates, and especially on the same plate? What I mean is like too many product segments restrict our market valuation, so it doesn't give a good proper valuation. So what's your thoughts on it?
Actually, just a slight correction. We are not into too many businesses. We are actually concentrating on increasing our existing businesses. So if you take a look at VNext Solutions, VNext Solutions is an EPC arm to help build relations for the VNext boards and Atom Solar Roof. What I mean by that is we'll be using VNext to do B2B deals. So today we are supplying our boards to, let's say, Coffee Day or Levi's or Mahindra Life Spaces, wherein we are getting into a space where we take the order directly from Coffee Day or Levi's and others and execute the product. So it's a forward integration in terms of increasing revenues for our main products. As far as Atom Charge is also concerned, it is in a similar direction, wherein we are using Atom Roof and VNext boards again to create infrastructure for the charging industry. So if you take each of our verticals in terms of what we are trying to do, our main focus is on the building materials, and to take the load off asbestos. With that intention, we have started VNext Solutions, VNext boards, and for that, to take it into a forward integration, we have started VNext Solutions. Atom integrated roofs is actually a forward thought in terms of how we are viewing AC roofing. The business is to provide a product where the traditional roofing systems like AC and metal roofing can be replaced with a forward integrated product like Atom Solar. Just to give you a hand, sir, even Atom base is using the VNext boards again. So the focus is quite clear in terms of the way forward. It is about how we are packaging these interestingly to get the maximum benefit for our main products. So that's what we are trying to do.
So do we have any plans to demerge non-asbestos?
Not as of now, but we are exploring options as to how best we can untap value. As you have rightly said, we are trying to do interesting things with the benefit of each of the base products. At the right time, we will definitely try to look at good opportunities for that.
Thank you so much. Wish you all the best.
Thank you.
Thank you. The next question is from the line of Malesh Savla from Shah & Savla LLP. Please go ahead.
Sorry, sir. Before we complete our previous question, my call was transferred to another participant. So we were discussing on, sir, these orders from railway, and I just wanted to get a sense on how big is the railway opportunity for our autumn division, because I believe if all these platforms roofs are converted into something like our autumn product, I think there can be huge market for that. And presently that ESG concept is also very prevalent. People want renewable and clean energy. So I believe we have a lot of potential in this division, and somehow some continuous announcement or marketing should also be focused on those lines, I believe. So I just wanted to get sense on how big is the market for railways, rooftopping and all those things.
Absolutely. I think, you're spot on in that. I'll just give you a brief picture on the Indian Railways, which is a very big potential for us. So in each railway station, we can fit almost 1 megawatt of atom roof. That is what we have observed. In India, there are almost about 10,000 stations across the country, railway stations. So even if you take a look at that, that itself is a 10 gigawatt market that we are looking at in terms of our target market and potential. What we have done in terms of the orders we have got is that we have managed to get ourselves listed in the Indian Railways in terms of a capex deal. So Railways is actually giving us orders to execute and install atom roofs at their railway stations. So we are right now in talks, and we have executed a couple of projects for them. definitely I would say you'll be hearing much more in terms of our product deployment and product spread in the coming months to go.
I think that will help us, sir.
Yeah, absolutely. And that's as far as the first point goes. The second is we are also trying to squeeze in the atom charging stations with the Indian Railways as well. We are under discussion where the Indian Railways is planning to deploy charging stations as well. So we are trying to give a proposal with the same concept where atom roof is used to create the charging infra across the stations. That's the second point. Third point, what you said is 100% true. We have to look at interesting, innovative ways to spread the product in terms of marketing. We are right now trying to, shortlist a couple of ideas to see what best we can do in terms of marketing. But I would agree with you 100%. We need to step it up and make the product more visible across. Yeah.
I also agree, sir. You have taken a right direction and decision to forward integrate and use your product and come up with some new ideas. And sir, may I know per 1 square meter of rooftop, how much power is generated?
So I'll give you a rough idea. If a traditional solar takes 100 square feet, for 1 kilowatt.
Okay.
1 kilowatt equals 4.5 units a day.
4.5 units a day.
Okay.
So that is 100 square feet.
100 square feet. Atom can do that in 65 square feet.
Oh, so we have an advantage over traditional.
Absolutely. That is the real, advantage that you get with atom.
And how costly we will be as compared to traditional rooftops?
So as we are a product which is also a roof, the costing comparison should be done with a roof plus solar.
Correct.
And on that basis, we are apples to apples. We are actually not expensive. We are the same.
So then, for efficiency, we are better than the traditional products. And who are the major competitors in that area? May I know, sir? I remember probably one KPI Global Infrastructure is one of the companies in Gujarat which is doing good business in solar rooftops. Who other are our competitors?
So the other competitors would be traditional solar guys. Okay, so any traditional solar module and a traditional roof would be our competitor.
Okay, so they will be unorganized companies?
Not necessarily unorganized. So there are many, like Tata Solar, for example, does many solar installations. There are EPC companies like Ford Partner, Ampless Solar. So these guys actually take up projects and execute with traditional modules.
Okay.
So there are various. I wouldn't say it's an unorganized market actually. They are standard players backed by standard module manufacturers like Vikram Solar and Wari Solar. So it's a slightly different model, I would say. Yeah.
Okay. So thank you, sir. That's really helpful. I wish you all the very best, and I will request you to, sir, arrange Concall immediately after the results so that the interest is kept alive in the numbers.
I know. I absolutely understand, and apologies to all on the call for the delay in posting this call. It's the first and last time that this will happen. I can assure you that.
Sure. Thank you. And even last time, sir, you were absent on the call, I suppose. So at least somebody from the top management must be there on every call, sir.
Surely. But surely. Thank you.
Right, sir. Thank you so much. That's all from my side.
Thank you.
Thank you. The next question is from the line of Chirag Shah, an individual investor. Please go ahead.
Hello, sir. So I wanted to understand what would be the working capital days on the board segment, and what would be the return on capital employed in the segment also?
So we are seeing about 45 days to 60 days, and 60 very less actually, and 45 days mainly, which is very similar to our roofing division as well. And the ROC, I think, Mr. Shafi, can you please help me out on that?
Yeah, our ROC is around 19% annualized.
19%, yeah.
Yeah.
Okay. So I was just doing some basic calculation. If you're saying that you make say 100 crores of revenue, for example, on the Coimbatore plant, right? And even if I take EBIT margins at say EBIT margins at 12%, so that would roughly work out to, I think, around 14% or so ROCE.
No, I'm talking about company as a whole. That
No, sir, I'm asking specifically to both, sir. Only both. Sir.
Yeah, it will be both about 13 to 14. Yeah.
13 to 14, right? Okay.
Yeah.
So one more question, sir. What would be the growth rate in the domestic market for the board segment?
So we are observing about 30 to 35% growth rate right now. And also just a point on the ROCE, what we are observing right now is because of the pricing that we have in the market. And we, as you know, we are a substitute product which is gaining good traction to be compared with traditional products which are on the decline. So as we go forward, we will have a good increase in the pricing, given the substitute non-eco-friendly products take a decline. That is when you'll get a good sense of the actual numbers. But right now, we're still operating at 50%, almost 50 to 40% of the competitive products in the market. Yeah.
40 to 50% in sense pricing you're talking about, sir?
Yeah. So we boards will be 40% to 50% cheaper than plywood in the market.
Got it.
Yeah.
Okay, so last question, sir. So did you mention the capacity of the Coimbatore plant for the boards would be 50,000 metric tons? I just wanted to check.
Yeah. Yes.
All right, sir. So if I have any further questions, could I get in touch with the IR?
Yeah. Vinay, my colleague, is on the call as well. Yeah, we'll be very happy to set up the call. Yeah.
Thank you so much, sir, and best of luck.
Thank you.
Thank you. The next question is from the line of Anil Jubalia from Banyan Capital Advisors. Please go ahead.
Yeah, sir. Thank you for the opportunity again, sir. I have just one bookkeeping question. So for the roofing segment, would it be possible for you to give our realizations for the 9 months of this year versus what it was in the last year?
Mr. Shafi, can you comment on that, please?
What? Mr. Banyan, what is the question? You want realization?
The question is that what is our realization, either per kg or per metric ton, in our roofing segment in the 9 months of this year versus the last year?
See, around 2-3 rupees difference is there, but we can't give you the rate realization per ton.
I think we will be able to.
No, we can take offline, Mr.
Okay, fine. All right. Thank you, sir.
Yeah.
Thank you. The next question is from the line of Satish Kumar, an individual investor. Please go.
Hello, sir. So regarding EV charging, like there are many restaurant chains in India, right? So for example, in Tamil Nadu, we have Adayar Anandabhavan, they have many restaurants in highways. So can we talk with them also for setting up EV charging? Because while people spend time in restaurant, they can do the charging, correct?
Yeah, absolutely. So actually our entire focus is to ensure that we spread quite literally everywhere anybody needs a roof and who needs power. That is our primary focus with Atom. And Atom charging station, as we rightly said, the retail network of things, that is why we mentioned Cafe Coffee Day and other networks like that. Absolutely, we are targeting these, and we will also be seeing, I think you all will be seeing good deployments across the country very soon.
Okay, sir. So you said we are importing solar cells. So do you think a new import duty will impact the pricing?
Absolutely. We will definitely be seeing a better experience on that. Yeah. we'll be getting an advantage in with respect to that. Yeah.
Okay, sir. Do you see battery swapping will impact EV charging segment, sir?
Yeah, surely. So we are, as I said before, we are mainly targeting the infrastructure. So that really enables us to partner with others who are into battery swapping, who are into charging solutions, who are into various other offerings as well. So our core offering will be the infrastructure, which is mainly dependent on VNext boards and Atom solar roofs. That will be used for, it's technology agnostic again. Tomorrow, anybody wants to have access to our network, we will be able to partner with them in good speed.
Okay, the last one question. So increasing, so as we know, crude oil prices are increasing currently. So other than logistics, will it impact our margin in coming quarters, sir?
I think our constant effort is to make sure that these increases have the minimal impact on us because of our R&D. I would again reassure that our R&D is quite strong to ensure that we maintain our basic margins, if not the complete offsetting. But right, as of now, we don't see that to be a major issue for us. We are on the right track and we feel we are in the positive direction. Yeah?
Okay. Thank you very much, sir. All the best.
Thank you. Thank you. Thank you.
Thank you. Ladies and gentlemen, this is the last question for today. I would now like to hand the conference over to Mr. G. Vamshi Krishna for closing comments.
So thank you everybody to attend the call. I would once again mention that all our businesses, the roofing, the VNext, and the yarn business, the Atom business, have all done well, and we expect each of these businesses to contribute significantly and increase their contribution in the coming quarters. And wish you all well and be safe. Thank you. Thank you so much.
Thank you. On behalf of Anand Rathi Share and Stock Brokers, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.